Welcome back. You're still watching Prime Morning, and I'm Zach Musbow. It's Money Making Monday now, and today we're going to talk about the stock market. It's a very important avenue for you to make some money beyond the, the usual, petty trading that you engage in, trying to buy and sell stuff. The stock market is an avenue for you to make some money if you know the ins and outs of it. And today we've got a lecturer with the University UPSA, Dr. Abdul Jalil Ibrahim. He's a lecturer of banking and finance at the department, with the banking and finance department at UPSA. He's going to help us appreciate what the stock market is all about and how best small businesses and individuals like you and I can make the most of it. Doc, good morning, and good to have you.
Yeah, good morning.
Wonderful.
Good to be here.
Yeah, great. Yeah. Well, you do have a presentation for us. Hopefully that presentation is ready so that we can get into it at the moment. But just before we get into the presentation, help us appreciate what the stock market is all about, because we hear about it every now and then.
Okay. Yes, so what I would say is that the stock market is, we all know what a market is. It's a place where buyers and sellers meet, transact a business. So the stock market is basically a market or a platform, because now it's becoming more virtual than even physical, where, let's say, those who want to buy stocks come and meet those who have stocks to sell. So basically a meeting place where you can buy stocks and also you can sell stocks.
Of course, I'm sure we're going to break it down to understand when you say you are buying stock and you can sell stock, what the stock entails. But now we have your presentation ready, and I'm sure we can get into it now. So Doc,
yes.
Yeah.
Yeah, so before I come to that, maybe we may have to also touch a bit on what is a stock.
Exactly.
Right?
Yeah.
So if you look at companies, so if you are a company and you are incorporated, you have to issue what you call shares.
Okay.
So the shares that you issue represent the the valuation of the company. So every share that is issued is owned by the shareholders.
Okay.
So these shares actually confers ownership to the those who own the company. So there's a difference between a private company and a public company. So private company means that if the two of us incorporate a company and I'm a shareholder, you are a shareholder, but we are not listed in the stock market.
Yeah.
We are just a private company. Let's say we want to, let's say maybe produce pure water, right? And we come together as a company. We set it up, then we have shares. So we can say maybe we have 100,000 shares that we issue. So that's a private company. But if you go to the next mile, where let's say when the company is growing and you can unlock more value, then you go to the stock market. You go public, basically. So you open the shares to the public. So now it's not like the two of us, but we invite the public to also subscribe into the.
You get more people to become
exactly
owners of
the company.
All right, I understand that the size, and Doc, you can just touch it, swipe it to your great. Yeah,
exactly. So if you look at the stock market, we have there are two in terms of the architecture. We have the primary market and the secondary market. So the primary market, basically, as I mentioned, when you are issuing a stock, or when you are, let's say, maybe listing. So let's say maybe our pure water company, if we decide to go to the public market, so then we want to list. So we call it initial public offering.
Okay.
Right. So you do an IPO. So once you do that, you are issuing new stock to the public. So that's what we call the primary market.
So you're inviting the public to have part ownership.
Exactly. So that's the primary market.
Okay.
Where new stocks are issued to the company. So if, let's say, you issue the stock, the money that's coming will go to the company as a sort of valuation of the company.
Yeah.
But once the company is listed in the stock market, right, we then come to the secondary market.
Okay.
So if, let's say, you have an existing stock listed in the secondary market, another person can buy the stock and sell to another person.
Okay.
So in this case, you don't have the owners of the company at play. It's those who want to buy stocks and sell stocks. So if, let's say, maybe I own a stock in the company, I can say, okay, maybe I need liquidity, I need money. So I can sell the stock to maybe another party. And the money doesn't go to the company. It's the shareholders, the existing shareholder, and the potential shareholder. So that's the secondary market.
So the people who have gone in to have a portion of your company, a portion of ownership of your company, maybe 6%.
Exactly.
That individual can now sell his portion, his percentage of ownership of your company to others.
Exactly.
Great.
Exactly. So
Great.
because it's an investment. So if I invest if I come back to the pure water business, if I invest into the pure water business, let's say maybe Special Ice is listed in the Ghana Stock Exchange.
Yeah.
If I put money into Special Ice as a stockholder, let's say maybe I need money, I want to build a house or whatever, so I need to exit the investment. So I have to look for someone who needs that stock, then I'll sell and make money.
Interesting.
And that's where, how do you make money? When you are doing the IPO, there's a particular valuation of the company.
Okay.
When the stock stays within 1 year, right, based on the performance of the company and other factors, the value of the share will appreciate.
Yeah.
So if I'm going to sell it, let's say if I bought a share for 1 Ghana cedi, maybe after 1 year, 2 years or whatever, the share would have been maybe 2 cedis or 3 cedis. If, let's say, the company is doing very well, then I'll make what we call capital gains. So the profit that you are making is the profit that you earn by holding the shares. So that's what we call capital gains.
Amazing. So for instance, if you had a part ownership of Apple at the time it started, and if you look at the value of it now, and you want to sell your shares, obviously, it will be big money.
Exactly.
Great.
And also, it's important to also mention that the share price, because someone may be asking, okay, what informs the price of the shares?
Yeah.
Right? So people, have the notion that the tangible assets of the company will make up the share price of the company. It's not like that. The share price is actually different from the book value of the company. In accounting, we say book value. We are looking at if you bring all the assets of the company, what is the value?
Yeah.
So that's the value of that's the book value in account or accounting value.
Yeah.
But the value in terms of the market value is what we call market capitalization.
Okay.
Where you take the share price and you multiply by the outstanding shares of the stock.
Okay.
And the market capitalization or the market value of the stock is influenced by so many things. It's more futuristic. That's why, for instance, Tesla, if you look at Tesla stock, it has been appreciating if you follow the stock market. But Tesla is making losses. How?
Yeah.
How can that make sense? Because people value Tesla stock based on future. The value that is put on the stock is based on the future prospects of the company.
So even though the company is making losses now, they are anticipating a certain increase in the value of the company.
Exactly.
They have confidence that it can turn around.
Yes. Right. So if you want to measure how innovative a country is, you look at the companies listed in the stock market and how they drive value.
And now you have some...
Exactly.
Yeah.
So I'll go back to the IPO.
Yeah. So
let's say maybe in the primary market, we can have government bonds and corporate bonds. So usually the government bonds issue, so like treasury bills we all know. So if government is issuing security, say short-term security, it's part of the IPO. And also we have the treasury notes, it's more long-term, and the treasury bonds. So these are all government-related securities. And we have the corporate bond. A company, Unilever can issue, a bond, or they can maybe do a season. Let's say they have an outstanding shares, and they want to issue new stock. So that will be part of the season issues.
Okay.
And the IPO, as I mentioned earlier.
Yeah.
So the secondary market, remember I said that's where you existing stocks are traded.
Yeah.
So if a market is actually supposed to create liquidity, where let's say you go in there, you buy, or you go there and sell. So the secondary market is supposed to provide the liquidity for people to exit their investments.
Yeah.
So the primary market is for new listing, and the secondary market is for to create liquidity in the market. So we'll look at the benefits of or the importance of the secondary market. So why do you need to have that secondary market, right? Number one is liquidity. If you look at, and later we'll see the data, in advanced economies, right, they raise money through the capital market or the stock market, not through banks. Unlike, in developing countries like Ghana, where most of our funding comes from banks. In advanced economies like US, China, they raise money through the capital markets. And we'll see that. So it provides liquidity for investors. So if, let's say, you are a pension fund or you are any institutional investor and you have holdings in a particular company, at any point in time, you can go there and sell, right? And there will be people to buy those stocks. So there's liquidity in the market, right? So you're able to provide that liquidity. And also, it provides issuer of security with regular information about the value of the asset. So how do you know the value of Tesla? How do you know the value of Apple? If you come, how do you know the value of, let's say, EcoBank? I know for last week, GCB shares have been doing very well in the Ghana Stock Exchange. How? And what is driving those ones? you can always tell the value of your stock when you are ready to sell and how much someone is willing to, buy. That's at that point that you can say, okay, this is the value of the company.
Interesting.
So it helps to determine the market pricing for new issues. So if, let's say, you want to issue a new stocks, so the secondary market will help in terms of the price curve, how much you have to price the stocks, and also reduce cost of searching. And also, in agency or transaction cost is extremely important.
Yeah.
So the market helps you to minimize the transaction cost and make it more efficient.
Interesting. So this is global stock market capitalization.
Yes.
All right.
Yes. So this is a very, very interesting, graph. So this basically tells you globally,
okay,
right, the stock market valuation in terms of the market capitalization. So the world is around, I think, 106 trillion.
Wow.
$106 trillion. So that's the total value of the stock market.
Okay.
Right? Stock market. 106 trillion.
That's the value of all the companies on the stock market around the world.
Around the world. 106 trillion, right? And the biggest, market is United States, which is around, I think, 42 trillion.
Wow.
This is massive, right?
Yeah,
trillion.
Huge. That's
trillion.
The value of all the companies on the stock market in the US.
Exactly. And China follows by around 35 trillion.
Wow.
So China is closely, matching US, foot for foot, right? And Japan and others, UK is also quite high. But these are just just to give you a sense of where the market is in terms of the stock market. So you see that the stock market, and later you see that even the stock market, the value is actually more than GDP.
Yeah.
Right?
Yeah.
Because it's more futuristic. GDP is about, okay, what is the stock of, your real assets or real goods in the economy? But the stock market is supposed to be futuristic. And later you see, let me just come here. Okay, before we go to that one. So I also try to let our viewers know what has happened when it comes to Africa.
Yeah.
In terms of the stock market in Africa. And you see that Ghana, we are around 78 million. It's not even billion. It's
78 million.
Yeah, in terms
the
of
value of the companies on the stock market.
Exactly.
78 million.
Exactly.
You compare that to the US, who are doing 40 what? They are in trillions.
In trillions, right? Yeah. And Kenya is around 409, and Nigeria is 1.5 billion, and South Africa is the largest, 192 billion.
Wow.
So South Africa is doing very well. But so that tells you that the stock market in Africa is extremely not developed, or the market is very, very small compared to the bigger players.
Yeah.
And also, if you want to have a sense of the debt, or to what extent do we see this stock market influencing economies? So we can do some simple, comparison to look at the market capitalization against the GDP, right? Because GDP is a very strong base. I mean, that's the main indicator for the economic value of a nation. Yeah. So if you take the market capitalization, right, over the GDP, you see that China is doing around 186%. Right, so it's like almost getting to twice their GDP, right? And United States is doing 145, almost 146%. And if you look at the world average is around 95%, right? Nigeria is doing 0.82, Kenya and Ghana is doing 0.09. So you see that our stock market is less developed in terms of the capitalization, right? Then we'll come to, something brief about the Ghana Stock Exchange, right? So I did some, the data I showed you is as at, 2024. Okay. But this one is as at August, when I check the latest numbers as at August, right? So we have the Ghana Stock Exchange, which started operating in 1990. Currently, we have around 36 listed companies. 36 companies? Yes. So 31 in the main exchange, and we have what we call the alternative listing, which is good for SMEs. So we'll talk about that later. 5, and that's making 36. And we have the total value around 11.5. So around the value billion of the stock market, Ghana stock market is 11.5 billion. Exactly, 11.5 billion. Yes. That's huge. That's as at August. Yeah, that's huge. Remember, this is also influenced by currency and all that. Yeah. And these are the issues, as I said, to 36, we have the ordinary shares, 30, we have the depository shares, and we have the exchange traded funds, and the alternative 5. So this is making the total stock exchange in Ghana. And if you look at in terms of the sectors, right, these are the sectorial makeup of the Ghana Stock Exchange. So we have finance, distribution. So the biggest is ICT. And I know ICT is dominated by MTN, right? It's one of the biggest company in the Ghana Stock Exchange. So that's the biggest, around 51, I think, billion Ghana cedis. And this followed by mining. So mining is around 44, and followed by finance. So this the main player is the main sector is the ICT. Telecom and all that, followed by mining, as I said. And I mean, what we want to see is that if you look at the makeup of all these sectors, they are dominated by foreigners. So we want to see maybe where policy is going to see Ghanaian companies also dominating or also driving the stock market. And I think we should have a conversation around our policymakers to have a deliberate policy
to help
Ghanaian companies list in the stock exchange, to be the drive. If you look at finance is dominated by foreign banks. If you look at mining, most of them are foreign companies. Why can't you have indigenous mining company also listed in Ghana Stock Exchange? So there should be a government deliberate policy to help a local mining company to list in the Ghana Stock Exchange. Because we cannot be mining for over 120 million.
We don't have a local.
So 120. I mean,
and we don't have a company. So there are two major questions that I want you to address. So that we wrap up, because this has been given an indication that we've got to wrap. Okay. But you want to touch on this?
This is very, very important. So we have what we call the alternative market listing for SMEs. So a listing in the Ghana Stock Exchange is not for small players. It's supposed to be for big players, right? But the Ghana Stock Exchange came out with a policy to help small business to also list. So they call it alternative market listing, right? So at least you can list there, can have access to long-term capital, I mean, with relative cost of capital, right? So they set it up to support SMEs. So if, let's say, you are SMEs, let's say you are a small business or medium-sized business, and you want to have experience with the stock exchange, you can follow this route. And currently we have about 5 companies which are listed over there. So you can have easy access to long-term capital, and you can raise capital at a relatively lower cost, and it will give you a reputation as a small business if you're able to list in the alternative market.
So just 2 questions I want to ask. Small businesses wanting to list on the Ghana Stock Exchange. So I'm a small business, I want to list. What do I do? What's the process like?
Exactly. So you go to the Ghana Stock Exchange. So they have a requirements. They have brokers who are supposed to advise you, because listing is not it's a technical process that you have to go through. So they have advisors. They will take you through. I mean, but the first thing is that you need to have a very strong corporate governance. The problem we have in Ghana is that especially the indigenous businesses, and the corporate governance is very, very weak. So if you want to list in the Ghana Stock Exchange under this market, the starting point is to have a very strong corporate governance. You need to have a very strong board. You need to have a very strong management team with right experience, right expertise, right? So once you have that, you can go to approach the Ghana Stock, because here you are going to do a lot of disclosure. And that's why I always say that all the people in Ghana, those who claim, especially the politicians, who say they are business people, the next time you get an opportunity, ask them which of them is able to build a business that's listed in the Ghana Stock Exchange. That's what the deal is.
So for small businesses, I think, so as you advise, you want to list this on the stock exchange, you get to the Ghana Stock Exchange, they have brokers there who will help you. And so in the process of helping you, they'll tell you what you need to put in place. Because bottom line is that when you get on that platform, like you said, you have access to capital.
Long-term capital.
Yeah, and that's really good. And the other question I want to ask is for ordinary people who want to invest in the Ghana Stock Exchange, how can I do that?
So what I would say is that, investment is a very technical thing. I will not advise you to just get up and go and buy shares in, let's say, MTM, EcoBank or whatever. Always seek advice from an expert. Right? So that's why mostly if you go to Ghana Stock Exchange, we have certified investment advisors. So you go through them as brokers. They understand the market, right? They know which stock is doing very well. what is the volatility of, you invest professionally, right? Then you invest and you can make money. So I wouldn't say, if you are doing that, you are taking a very high risk, because finance is very technical and you need some level of skills to be able to do it very well. But what I would say is that you can invest, because the equities are there. Currently, GCB is doing very well.
Yeah.
So those who put in money in GCB, they are very happy over the years. The shares have appreciated, and also if you are having long-term view. So let's say you are looking at maybe investing for your children, maybe after 20 years, whatever. You can go there and put in some money. Or if let's say you are maybe a small business, and maybe your margins are very high, and you want to you don't want to let the money to be sitting idle, you can put that money in there.
So just so we wrap up, how much do I need to invest in the stock market if I seriously want to do it?
Actually, because it depends on the stock
on
price.
Average.
So you can even do 100 Ghana cedis, 1,000. So it depends on the stock that you are.
On average, if I invest 100 Ghana cedis,
yes,
and the stock I invested is doing well,
yes,
on average, how much do you think I'm going to get on my 100 cedis?
You see, the idea of the return, right, is supposed to be something above inflation rate.
Okay.
Or it's supposed to be above the treasury base rate. Because if you look at treasury base rate, currently, I think it's around 16% or so. I don't remember the current one.
Yeah.
So if you are going to get it, because why would I go and put my money into, let's say, EcoBank shares, when I can safely go and put the money into treasury bills? That one, the risk is risk-free.
So just a figure. Give me a figure. 100 cedis, how much on average will I get?
Yeah. So let's say 20%. So you can. Maybe 20 cedis. 20 cedis. Yeah.
It's good money. 20 cedis is good money. On Money Making Monday, 20 cedis is good money. And I think it's an area that we need to explore further so that we can take advantage of it.
Exactly.
Thank you very much for, Doc, thank you very much. This is a very valuable education.
Yeah, thank you so much.
And I think we're going to get into the space and make some more money into it.
Exactly.
100 Ghana cedis, 20 cedis, small, and you become a billionaire. Doc, I think I have to list my company.
Exactly.
Sharp. Prime Morning Limited. Thank you very much.
Thank you so much for
watching. It's been Prime Morning. We'll be back same time tomorrow. Do have a wonderful day.